Welcome to WCS Money Tutorials. Today's topic is the home office deduction for business owners. Deduct both direct expenses for the home office and indirect expenses, such as mortgage interest and insurance. If your business requires travel and you work out of your home office, then your mileage counts as deductible business miles. There is no non-deductible commuting distance. The home office deduction is only available to business owners. Employees cannot deduct home office expenses until 2026, unless the law changes. The deduction is limited by business income, but disallowed deductions can be carried forward. There is also a simplified option that is easy to calculate, simply by multiplying $5 by the number of square feet used for the home office, up to a maximum of 300 square feet. Obviously, this yields a maximum deduction of $1,500. The home office area must be used exclusively and regularly for business. Occasional work does not count. You must perform most of your work there or earn most of your income because of activities in the home office. You can also use the home office to manage the business, even if you spend most of your time outdoors, such as a sales representative or plumber. One exception to the exclusive use requirement is in the provision of daycare services, where an area can be used exclusively for daycare during business hours, but may be used for other things during non-business hours. Direct expenses apply only to the home office area, so they are fully deductible. Indirect expenses are limited to the cost of the expense multiplied by the business use percentage, which is the ratio of the area of the office over the area of the whole home. Indirect expenses apply to the whole house containing the office, but only the business use percentage of each expense is deductible. Indirect expenses that every taxpayer with a home office can deduct include utilities, insurance, casualty losses, repairs and maintenance, and even the cost of domestic help. Renters can deduct rent, while homeowners can deduct depreciation, mortgage interest, real estate taxes, and other expenses incurred by home ownership. However, these deductions are limited to the business use percentage of the expense. Homeowners can claim depreciation for their home office property, but the depreciation must use the commercial recovery period of 39 years, rather than the residential recovery period of 27.5 years. The deduction for partial years of home office use must be prorated accordingly for that year. The depreciation deduction equals the tax basis of the home, not including the land, multiplied by the business use percentage, multiplied by the depreciation percentage, which, for commercial property, is 2.564% for the whole year. The tax basis of both the property and the land is the lower of the fair market value or the adjusted basis when the home office is set up. This tax basis is used for all subsequent years. Freeze the screen to study the details and the example. The home office deduction can be calculated using a simplified option, which eliminates record-keeping requirements for the home office and the need to account for the business use percentage of expenses or depreciation. Simply multiply the square footage of the home office up to 300 square feet by $5. This may be advantageous if your office is small compared to the rest of your home. The simplified method for daycare providers is calculated the same way as it is for other businesses, but the deduction is reduced by multiplying the deduction for a regular business by the ratio of the number of daycare business hours in a year divided by the number of hours in the year. Full instructions and a worksheet to calculate the home office deduction using the simplified method are provided in the instructions for Schedule C. Special instructions and a worksheet for daycare providers is also found in the Schedule C instructions. You may choose actual expenses or the simplified method for any given year, but once chosen, then the election is irrevocable for that year. However, disallowed deductions can only be carried over from years using actual expenses to future years using actual expenses. The simplified option does not allow disallowed deductions to be carried forward, nor may any previously disallowed deductions be carried over to any year using the simplified option. The home office deduction is figured on Form 8829. Part 1 is used to calculate the business use percentage. Part 2 lists the deductible items. Part 3 calculates depreciation for homeowners. Part 4 is used to calculate the carryover of disallowed expenses. The result of Form 8829 is then transferred to Schedule C. Schedule C is also the form used to choose the simplified method for claiming the home office deduction, in which case Form 8829 does not have to be filed. If you claim depreciation for your home office, then that depreciation must be recaptured when the property is sold. The tax rate on the recaptured depreciation is the lower of your marginal tax rate, or 25%. If you have depreciation, then you can use the unrecaptured Section 1250 gain worksheet in the instructions for Schedule D. Then transfer that result to the appropriate line on Schedule D. Thank you very much for your time. If you liked my video, please give me a thumbs up and subscribe. I would appreciate any suggestions, so please leave them in the comments below. Thank you.